Guess we're getting that drift up. SPX is about 20 points from all-time highs. So I would have to think it's going to hit. Hey, Koshik. How you been, man? I'm all right. I'm a little tired after that mini vacation, but I'm just trying to catch up here. I'm watching SPX and I can't believe where we currently are. I didn't anticipate that we'd be 20 points from all-time highs. How have you been? Been carving up the market, hopefully. I've been trying to get my bearings right on this market, but everything's kind of pointing to like a drift up. We're now in positive gamma. You can see the gamma chart. Prior to leaving, it was basically all negative, right? But now we're in that positive gamma, and a lot of times positive gamma tends to drift towards that the largest blue levels, the largest the market makers positive positioning, just like technically the positive gamma. Let me see here. I'm going to take a look at yesterday and see how that looked, because yesterday we had a really nice drift too. Yeah, I was looking at the charts and I have seen 0 retracements. It's insane. 7013 ES is gamma flip. So that's your so currently you're seeing negative gamma then. And oh sorry, no, you're seeing positive gamma. 7013 ES. Yeah, I'm looking back and there isn't many retracements, and the retracements comes at really weird times. Like yesterday, a pullback came after 2 o'clock. And the day prior there was no. So Monday had almost no retracements. Yeah, yesterday's price action. I'm just looking at Tuesday's price action yesterday, and um, from a gamma perspective, and I noticed that price action just went right into that deep dark blue, which is that positive gamma. Normally acts as a magnet. Looks like NQ swept there. Swept the high of day. We're getting a small pullback. Just gonna go back to Monday and see what happened there. It's a gamma actually. This is a charm on Tuesday. Let's go back to Monday. I would have guessed a positive drift up based on positioning, but I'm personally not prepared today. I'm just taking a quick look at how things shaped up on Monday and Tuesday. But for today, I was thinking the pivot was around that 62.68, 62.70 level. That's what I'll be watching. On SPX. Sorry, I should clarify that. There's a pretty large positioning that's not being shown here on SPX. 6965 and Vol Signal's platform, when he did his morning meeting, he had shown a 6265 level that was about 4K in sizing. So it'd stick out like this, similar to the 6900. So naturally, that would be a bit attractive for price action. Without that positioning, I would have thought that we were going to drift up towards like 7,000. And if Vol really crushed, then I would have expected a potential move to 70.25. See that the dark blue zone up here on gamma, and then obviously the charm area, which would generally be a drift up here, since this is a supportive charm. But again, charm isn't really charming right now because it's pretty much ineffective. But what I would like to see is that gap fill, which looks like it might have just happened. That 15-minute candle looks pretty bad. So let's see how it acts around here. Yeah, this is 69.70. Yeah, we're hanging around that 69.70 area. I would have thought it would have been a decent bounce point, but after a candle like that on a 15-minute chart, I'm not sure. Yeah, it's holding up here. Decent pullback. So far, only about a 5-point pullback. Keep in mind the straddle is only about 25 points. Let me just double check that again. The straddle is actually 18 points at open. 19 points. So I'm just going to round that off to 20 just for ease of measuring. So that would be about 7,001. So just at all-time highs, basically. And then 69.60. 69.60. That was at 9:30. At 9:30, it was sitting around. The straddle was 18.65. So I'm just going to round it off to 20 because it's not an exact science. And we opened at 69.81. So you're looking at 7,001 and 69.61 on SPX. Yeah, prior to open. So today is VIX expiration. It happened in the AM already. So I find that after VIX expiration, the positioning starts to clear up from a vol perspective, volatility perspective, or VIX perspective. And then on Friday, the index starts opening up. So after the Friday OPEX, come Monday, you have less influence from the next month's positions, and the market is essentially free to move, because whatever flows that would have been influencing the market likely is pretty much gone, because OPEX is like the largest positioning, and dealers basically have to hedge leading up to that OPEX to stay, I guess, delta neutral. And oftentimes, I don't know if I mentioned this, but the week prior to OPEX, so we're talking about April 6th to 10th, and actually I would even include April 3rd to 13th. That is peak influence when it comes to the April 17th OPEX positioning influences. And oftentimes you tend to see a natural drift up the entire week before OPEX. So I would say around April 3rd to April 13th, you have peak positive flows. And I don't know how that, I'm going to take a quick look here just to see when we started drifting up. Yeah, that whole entire period. So every month I would look at that week before OPEX. It's always like, so you figure out OPEX is the third Friday of every month, and that's generally the largest positioning of the month, because it's a monthly OPEX, third Friday of every month. And the week of the second Friday of that month, so that would be April 6th to the 10th, has like peak, what we call Vanna and charm flows. This is something I learned from Chem Carson, and it's mainly because the market has always been net long positioning. Everyone buys into the market through 401ks and et cetera, et cetera. So everyone is generally long the market, generally speaking. So positioning always tends to be supportive, and we call that like a window of strength between April 6th and April 10th. And then if we look at the next month, it would be around like May 4th to May 8th. And then sometimes I would include the Friday before and then the Monday after, just as like a general take, that mainly because, like, for instance, the first Friday of the month is generally at NFP, and sometimes you get that massive move from NFP, the non-farm payroll, and that essentially starts your positive drift up or supportive flows. Like, I shouldn't say positive drift, because if the market is going down, it would generally be almost like a stair step down. Today's value area got rejected twice. Yeah, that's a good point. But so after expiration and after OPEX, I would say that's the time to be cautious. Like, strategically, where we're currently at, I would consider entering puts come, and this would be a swing type of position. I would consider entering puts come the end of this week, and then or maybe even on Monday, and then holding it through potentially May for the quote unquote window of weakness. Now SPX also left like a few gaps on the way up. Generally, we like to retest gaps. Yeah, now that the gap is filled, I don't know that there's going to be much more downside. Or I'm not willing to bet on it anyways. That's kind of where like that NQ sweep short down to the gap fill would have been perfect play. I wasn't really prepared today, so apologies for that. How have you been finding your the Gex tool that you use? Looking at Monday's data here, I noticed that it wanted to stay in positive gamma for the most part. Touch 0 gamma line to the gamma peak, pulled back and pumped above that, and hit there. That's interesting. Yeah, I'm just looking at gamma charts, and the gamma charts look pretty decent, I would say, on OptionsDepth for Monday. If we come down, it would be to about 69.50, 69.54. And now we're in this, there's like a dealer negative positioning cluster that's been built up between 6970 to 7005. NQ is headed up higher. Oh, you want to see the calls and puts? I think that is possible, but I don't think it's possible on the intraday, because this doesn't give me the option. I think I can show it individually from the looks of it. Hang on, let me go here. Let's go intraday. Here you go. I can do it here. So let's say I think you can see that, right? So keep in mind the call positioning on the left side are short calls. And this is from a market maker perspective. So if you want to see what people own, like customers like you and I purchasing options positions, I can turn on customer. And then you'll see what people are actually buying, because this is like the opposite of what people are buying, because the market makers take the other side, right? Yeah. So there's a reason why we actually look at net, is because from a gamma perspective, and from a market maker perspective, when they hedge, when you do the calcs, the short, like a short position, whether it's puts or calls, had the same impact, and the long positions, whether puts or calls, have the similar impact from the calculations perspective. So we look at the net. So for instance, I don't know, take 6980, which is roughly where we're hanging out. You got 1385 or 1385 short calls on a market maker's perspective, and then also short 254 puts. So cumulatively that would be 1500 or 1600. If we go back here, look at it, yeah, you get 1600 net, roughly 1639 for the 6980. And the market makers, when they do their hedging, they base it off the net because they have similar impacts. But I agree, like when I first started, I needed to, like, I always had to reference the calls and puts, and I always looked at it from a customer perspective too, just so it was easier to follow in my head. And then I had to retrain myself to think about it from a market maker perspective. but from a market maker perspective, anything on the right side is pretty much supportive or magnetic. Anything on the left side is more volatile and could cause, like, I guess, moves, because technically anything on the left would be negative gamma. Make that full screen for you so it's easier to reference. Let me just make sure that this is, oh yeah, okay. It's the most updated positioning. See, when you see this type of positioning, naturally you would think we would be more attracted to this 70-25 level and up. But I think there's something that's not being shown here. And that's the 69.65 dealer longs. So they would show up over here, or sorry, over here. And it would be showing about 4,000 positions. Just going to go back and forth here. Yeah, see, this cluster matters to me. Because I would think, I would think price action is likely to kind of hang out between this cluster. Bounce off the 65 level. And you can kind of see as positioning starts accumulating throughout the day, as more positionings come in, as customers start taking more and more positions, you can start seeing the negative gamma just creeping in. So like price action's almost in negative gamma. You can see the positioning is negative gamma, like localized negative gamma positioning, but in general, we are in a positive gamma regime. The 69.54 would be that low. 69. Interesting. Yeah, that's what I'm hoping for. And the timing seems to work very well for that to happen. For instance, I've been viewing everything from an OpEx kind of lens. So the expiration just cleared things up to move again, which just happened this AM. And then often that times you have to pair it with Friday's OpEx. And once Friday's OpEx goes, all the large positioning kind of comes off, or is no longer impacts the dealer positioning because it expires. And then we have to look at the next month's positioning, which would be May, the third Friday of May. That would be the 15th. And that would have influence again. But we're so far out that it doesn't have immediate influence, which means we end up with this window between April 20th to May 1st, where things could potentially be weak again. Nice, like if it ends up being weak, that would be the period of time that it's weak. Kind of like when we spoke about February OPEX, and after February OPEX, you often have this weakness that comes afterwards, and that's what we essentially saw. And it's very it's based on seasonality. The seasonality is based on I guess how like large portfolio managers manage their funds, and they kind of run out of money or run out of bullets by that middle of February timeframe, which is why they've reallocated all of January and into the mid of February. And then once OPEX rolls off and that third Friday of February options positioning expires, then you have this window of weakness where portfolio managers have no more to reallocate. Just why we have that seasonality in February, or late February and into March. Yeah, I agree that there's definitely massive resistance, and we can see it on just a typical price action chart, right? Which would be all-time highs. But there's also resistance here at 70.25, 70.35, but that would be all-time highs. That would be like a 50-point move from here. Just looking at what Alma was writing about this morning, and her centroid's at 69.72 SPX, and she was expecting the main scenario is ranging around at centroid for the most part. Her secondary scenario is an upwards magnet pinned to 7,000. Which would be her upside pivot. Her upside target is 7,022. Locally, volatility must be high at the pivot in order to climb up the mountain. And then above 7,011, target is very magnetic. Okay, so we have to get well above there to even see 7,022. Downside pivot 6,900. Now, I think it's going to be pretty challenging to get to 6,900. Just because you have a bunch of things slowing you down here at 69, between 69.50 and 69.65. The dealer positive positioning, which would be all this. But that massive move up was like massive short squeeze. And then you also have the CTAs releveraging. which is often the reason why you see almost like a rocket ship style move without any sort of pullback, just because all the bots or algorithms, CTAs, they tend to just buy up after a certain level has been passed, because they basically ride momentum. They're often caught off guard. Yeah, it's trying to stay out of this negative gamma area on the gamma chart. But that's just intraday positioning. The gamma chart prior, I guess this would be like the 12 a.m. update. It's pretty clear. It's still positive gamma. Yeah, with the potential drift up. Look at charm here. Yeah, charm is it's supportive too. But it doesn't really become extremely supportive until about 2:30. Afternoon, after 1 o'clock. If we're in like that 7,000 region, we might see a move further up, just based on dealer hedging flows from a charm perspective. Can you see the straddle right now? I want to short here. Sure. Give me 1 second. So the straddle right now is 21. Which is quite interesting that it's gone up from the open at 9:30. So I had originally marked the straddle at 25 because I was measuring it at around 9 o'clock, 9:10. But right now, 10:17, 21.55 is the straddle. Yeah, I would love a short back to that centroid, the 10 points, 13 points or so. Especially, it just swept a little bit. Yeah. ES just swept its high a day again. VIX is at 17.52, which is the new low of day. Perfect. looking at NQ and ES, their volume profiles for on the daily, and I can see NQ running up another 80 points or so. Hey, that's not a bad top wick, eh? I'm gonna try to short too. So I'm just gonna look at the daily chart here. And this is the edge of node on volume profile. Then change the color on this, a bit yellow. Yeah, I think that measures at around 170, 180. So that edge there is going to be an interesting reaction. This one would be also interesting. That's around 285. For SPX, still another like 25 points maybe. Definitely seems like fighting an uphill battle with the short here. Yeah, it's really trying to stay out of that negative gamma. Yeah, 7,000, 7,005 would probably be the better short, just based on the cluster that I like to follow. But that was worth a shot, mainly because it was a high volume 5-minute top wick that I normally like to play. And it happened on both the NQ and ES. Yeah, I took the L. I don't really want to hold anything. Though, I would say it was worth a shot. I'm just going to look towards 7,005 here. Bullish flows are just insane. Yeah, I think probably nothing until maybe 7,000, 7,005. Something to look for around there. Positioning seems to show something there. 7,000, 7,005, even on the daily positioning. Let me show you the daily positioning. How can I do that? Yeah, on the daily positioning, it's 7,000 and 7,005. There's a call spread there, or was a call spread. Now things look a little different. Large dealer negative positioning level here. Yeah, I'm just going to pay attention to this cluster. Right to 7,000, 7,005. 7,005 would be I think it's going to be a tough hump to get over, given the 7,005, that is. Given the size of that position is about 5,000 in sizing. And below, we couldn't break down below 69.65. So with the cluster, it was easier to tell that 69.65 could have been that edge. But I also know that vol signals, the way he calculates is breakdown by strike. His data set shows 69.65 at 4,000. So this should look a lot larger. Now, whether the positioning came on, whether more positioning came on or off, I don't know, because I don't have an intraday update for vol signals. But it was an interesting discrepancy to see in how OptionsDepth calculates it versus vol signals. Yeah, and we're just on the gamma chart, you're just hovering outside of the negative gamma. So it's holding the zero gamma line pretty well. And then as we rise, I would think we're going to get actually 7,000, 7,005 up here, somewhere around this time. And then maybe negative gamma would have climbed up to that zero gamma line. And if we break down, we do a quick run through negative gamma. But it's hard to tell. So I'm going to look at yesterday, because yesterday had an interesting spike down at around 1:30, 2 o'clock. Just go 1 o'clock. 69.65. So around 1 o'clock, we were sitting around here. And 69.60 at a large positioning. Here, 69.10. We didn't drop until about 2 o'clock. Okay. Just want to see how price action ran up here. So here we're now at 69.63. So we went through 60. We're around here, 63. I think the high was 6.5. That's interesting. So why would it be 6.5? We've been stuck in negative gamma this entire time since 12:30. Yeah, it's been a negative gamma this entire time. Oh, that's very interesting. From 2 o'clock, 69.60, 69.65 was the high. Hovering around 60 here, and then a 20-point drop, 15-point drop. 15 to 20-point drop. It dropped from one cluster to the next cluster. 69.45. Okay. And we popped right back up and rode right through. $12,000 positioning. Let's see. I wonder if that came off. 3 o'clock. 3 o'clock would be around here. Okay, we're getting closer to that 7,000, 7,005 level. So just be watching that for the most part. It's a waiting game now. Okay, 6.5 came off. 60 actually didn't come off. Yeah, we just had like a nice impulsive move that ran through 69.60 into 6.8, bounce back to 60. So boom, 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 and closed at 68. Okay. Interesting behavior. A positive drift up for the most part. We're getting a little bit of a pullback here. Oh, the positioning has changed a little. Let's see what happened. So 7,000 now is all dealer longs. dealer long calls, which is customer shorting calls. So they're trying to collect premium around there. But it's only 800 positions. Very interesting to see. 7005 has 4,800 positions. It dropped a little bit. Yeah, I agree. I was a bit late getting, well, I was a little late getting on this morning, and I didn't do my usual prep. But once NQ swept, that was a very nice short. NQ swept, you short that to gap fill. Very reasonable, especially given what we saw with the positioning at the time. We know that, and then also turns out that Alma Centroid was around there, 6972. Yeah, I just like that gap fill play. Boom, boom. It was a little early in that it happened within the first 15 minutes. Even Charm is trying to stay out of that suppressive charm zone. Trying to stay in that blue area. There is a level here. Let me see. On the daily, if you're looking at ES, I think there's a 7034.5 level. Now with ES is a bit interesting because it's like continuous contracts and it gets adjusted. I often like to look at SPX for that. Not for volume, but yeah, and we just got a sweep on SPX. 699348. Yeah, 6993 was a sweep, which is probably why we got that little red candle. Six nine eight three two five ES 15 swing points is gold for longs, but never got there. 6983. 6983. Oh, I would have loved 6983. I would agree. What does that equate to in SPX terms? I think that's around 6946, 6950. Yeah, that would have been perfect. Because if you look at this clustering here, if we break through and enter this clustering, 6945, 6940 would be a good long to go off of. Shoot, right towards, yeah, that would have been perfect. Now, that sweep on SPX, pretty sure you can see it on the SPY too. Let's see if SPY swept. The SPY did not sweep. Yeah, SPY didn't get the sweep. The sweep is 69714. And I think we're just under it, 69707. But SPX got the sweep at 699348. Oh, that was a big VIX move too. Oh, that's so painful to see because that 5 minutes at the 10:15 candle was a high volume candle that top wick, which is normally a good sign to short for me. But then you have a higher volume green candle for the 10:20. And the 10:30 was an engulfing candle with high volume too. And then it pulled back about like 7 points. Basically back to our entry. I would have loved to see a move back to POC. That's ultimately what I wanted to see, but 20 points from here. Yeah, positioning is changing a little. I think I'm just gonna wait. Not doing anything. Yeah, VIX 17 is extremely slow. So just gotta hang on to your positions to your target. Everything is much slower. So a straddle of 25 points roughly. Well, let me check the straddle again now. See what happened. Because VIX is popping up. So straddle is still measuring at about 20 points. So it hasn't come down at all. kind of have a love-hate relationship with volatility, mainly because when it's volatile, when I read the candles, the way I read candles doesn't always pan out that way when it's super volatile. And also, like, a lot of my stop losses has to be adjusted accordingly to suit in order to fit the risks that I prefer. And then once I adjust all that, by the time I adjust, then vol drops again and VIX is at 17. And then I have to readjust. So it's kind of yeah, it's definitely a love-hate relationship for me. But I do like the faster moves. But I got to get back into the swing of things. Can't say I saw this coming. Like, there's no way. And I was just running through Twitter and a few other guys that I follow, and a lot of them got caught off guard. Apparently the only person that didn't get caught off guard was this guy named Sol, and he's on Trade. I think their Discord. Let me see. It's called Trade Edge. But it's not free, and it's about $100 a month, and they use volume profile. And Sol and that Forest guy run this channel, and oftentimes Forest live streams on YouTube for free. But I think Sol is the only one that anticipated this move, the run up. He said he was bullish. I think he's entered and closed out a lot of his trades in between. Now he says he's aiming for like another 100 points on NQ. I still want to see how we'll react off this snapshot here, which we're much closer to this level here, which I think is 26,170, 180, around there. That's off the daily, so it's give or take a little. So when it's funny because I'll probably look into entering puts or swing into maybe towards the end of May, mainly because vol is so low, and I don't think it can go any like back to 15. Like VIX, I can't see it going back to 15. Next week, Tuesday, we have, I believe that's the expiration of the ceasefire, and it also happens to be after OPEX. So things are lining up very interesting. I just don't know. Like, I don't know what to believe when it comes to these tweets about the war. long calls have been picking up here. Dealer long calls, 2,300 in size. Offset with some puts. I guess we're only about 1,800. And we're about 10 points away from all-time highs on SPX. NDX, we're still about 200 points away. I'm just reading some things that Vol Signals has been mentioning. And he's saying, now we test my hypothesis that maybe this was just a vol down move due to hedging pressure, unwind into VIX settlement. If that's the case, usually the market shows its hand in the first 2 hours. This is more of a wait and see moment, not trying to guess out of the gates. The index is still holding. I find his timing is a little off, but I would think you have to account for OPEX. The index is still holding. The major test is 7,005 now, per the ODTE positions. I do not think we are in a vol down spot up territory. And I don't think vol has much room to go down anyways from this level at this time. So he doesn't think that VIX will continue going down and SPX will continue going up. Good time to pick up cheap options in either direction for hedging or betting on continuation without overcommitting capital. Profile becomes fairly negative gamma to the upside on account of positions flipping across the market maker's largest long Vega cluster right here. Yeah, it's no problem. It's part of the learning process. Yeah, I definitely like the volume profile play, especially off of like value area low, go long, especially when it like lines up with I don't know, something like a sweep of some sort, or like an SPX gap. But this thing looks like it's just trying to run up towards that 7,000. Yeah, with VP, I always found it like when I first started, I always found it like I struggled with it mainly because I didn't know which time frame to draw it on, and um and how far to draw the VP, because every time you zoom in and out of the price action, the VP automatically adjusts, right? So now there's on TradingView, there's like a drawing tool called fixed range volume profile that allows you to basically backtest a bit better with volume profile. You can kind of draw out that you only want the volume profile between X dates, and it would show you that. And then you can see if it bounces off any like key levels on the daily. And then there's also a drawing tool called anchored volume profile on TradingView, which I use more and more. And it basically draws the volume profile from the current date all the way back to whatever date you want to. Yeah, so ESM is contract specific. Let me see here. Yeah, ESM is contract specific. So it's hard to rely on. So for instance, if you use ES1 exclamation mark, that's the continuous contract. It includes all the roles. Then you have to decide whether or not to use the adjacent on the bottom right hand corner when you're using ES1. E adjacent auto adjusts all the previous values to suit the new contract. So for instance, if it's like roughly, I don't know, 30, 50, let's say it's a 50 point difference, it'll auto adjust that. Which kind of like messes everything up in my opinion. I've always preferred like when let's say the ES contract rolls, which it did last March, you have to either watch a contract specific one. So ESM would be contract specific. let me see this. ESM 2026. So the all-time high there is, I don't know, 60 points from here, 70 points. You know, when does breakouts work and when doesn't? Just need to find an entry method with right stop loss placements for breakouts. Yeah, and just going back to using ES1 right now, I find it very challenging using ES1 to play off liquidity levels, mainly because they have been calculated. Now, whether or not like Wall Street and big hedge funds are using it is a completely different story. And I think it matters because if they aren't using this B adjacent level, so the adjusted ES1, then no one's following that liquidity level. Like no one's going to be playing off that liquidity level if big money isn't following it, right? So I'm always cautious when it comes to contract rolls, and if price is coming back up to like certain levels that exceeded the, I guess, current contract, which is why I track SPX. I like SPX for that reason. I like SPY for that reason. And SPY has the volume that backs it up. SPX doesn't, which is why I use ES volume. But SPX levels are more they're more important in my opinion. So sweep levels on SPX matter more to me, especially when the contract roll kind of messes everything up on ES. Yeah, I'm personally terrible at playing breakouts. What's interesting here is that VIX is climbing, but ES is staying still. Like we're trying to grind up, but it's very challenging. One thing I also notice is that if you look at the move up is on pretty low volume. So it's hard to trust. Yeah, the daily move, I'm just looking at SPY right now since I need like more accurate volume. Or you can also look at ES. But this move up has been pretty low volume. Like it's not like everyone's piling into it. Which leads me to believe that it's like a short covering of some sort. Our NQ is rejecting that daily edge at 26,180. So this is the edge here on a daily. You can kind of see that massive drop off. $7,000's coming off a little. So far, the 5-minute ADMA has been holding up NQ very well. VIX is up from 17.4 all the way up to 18. So it's interesting to see VIX run up here while SPX is grinding up. 95 again. Yeah, the grind up flows are just way too strong. Still want to see if we can go to 7,005, but we've been stuck here at 69.90 for like the past hour. I think SPY finally swept. It did. And now we're very close. About 0.6 off the all-time highs for SPY. SPX, we're about 6 points. All right, sounds good. Take care, Koshik. They're gonna call it too, but I'll be watching at 7,005 level.